Good morning, traders, and this is your Aussie South African Top 40 Daily Review. So, as I mentioned yesterday, we're at a fairly significant level. Let's just do that. You can see there's our inside tail, and we have tagged it. We tagged it the day before yesterday, and then today we ended up, yesterday we ended up with a pretty much a nothing bar. Okay, now this could be seen as a wise man number one on the daily. That was a wise man number one there. Okay, and you can see the deviation from red line and how we move to the downside to come and test the alligator. But now we have a pretty strong uptrend at the moment. Oscillators are indicating we're tired. We don't have diversions anymore. Yesterday we had diversions brewing, but today, so the day before yesterday, we had diversions brewing, but yesterday we got nothing. This inside bar is a little bit worrying, and I'm not too sure what to make of it, to be honest. So let's just have a look at what's going on. So 10 cents is down 0.5%. The US markets were slightly up, not massive. The Nasdaq was flat. I mean, it was down 0.06. And Rand dollar 14.12, so that strengthened a little bit from yesterday. And yesterday's high was around 14.13. So anyway, there's nothing really that's going to move it. We do have non-farm payrolls. That'll definitely add some spice to the South African market. But if you look at the 4 hour, we had this pin bar here off a level. We've broken below the pin bar, but I'd like to see another attempt at it. And another attempt that fails, that would give my confirmation that I'll be looking for a bit of a short. Okay, so for now, if I look at the 4 hour, there's nothing really here to tell me that we have a potential move to the downside. Brewing, okay. So obviously I would love to see a pullback back to one of those two levels. So a decent pullback back to one of those levels before another attempt to make a new high. If that attempt at a new high fails, then that would be a double top and an opportunity to get in short. But for now, stick to the strategy that has been working, okay, and which is basically the closing range strategy. If you look at the oscillators at the moment on the hour, they're all grouping to the downside, ready for another buying frenzy, which is pretty interesting. Okay, I would have liked to see it come back a little bit further, but by the looks of things, this consolidation here is what we're all about right now. So there's the bottom of the consolidation, and you can see, I'll just move that one there. So there was our consolidation, breakout, and now we're consolidating again. Okay, so let's just get to the 30 minutes. That's pretty much what I'm trading on this at the moment, and we'll use Fibonacci for this. So that was our range. There's a top and the bottom of the range, and you can see we did break down at the bottom. We came back close to the 50%, and then we kept trading to downside, but we never really pushed down to our range target, which is there. Okay, and like I said to you yesterday, often what happens is when the range breakout fails, and this hasn't really failed. I was expecting it to sort of go above the top and come below the range, and above the top and below the range, and sort of just frustrate you. But we did get the breakdown and tested. So your stop would have been above the range, and if you basically closed out at the close, you would have made a bit of money. It wouldn't have been a lot, but you would have made a few pennies. Okay, so I think today is, I don't even want to look at this one because it is so small, it's not even worth looking at. So you see, that's our closing range, which is literally 73 points. It's not even worth it. Okay. So I think for me, it's really going to be just wait and see what happens. It is looking like this the sell-off is going to continue a bit longer. I think what you're looking for is a break below the low of yesterday, and you want a daily close below here, 51972. And I just want to have a look at what our weekly is looking like. This little green bar. So we could reject this. So in other words, have a big down day, leaving us with a big pin bar off the level, and that would give me confidence. We're moving. We're going to consolidate a bit to the downside, give us another opportunity to get long. But for now, closing range strategy is not going to work. The range is too small for me, and the only other thing that I can see is a range break of this area here. And I just want to see what that target would be. So that would be interesting. So I think if we do get below, so we do get a break below 51972, I would be inclined to get in on the trade as early as possible, let it run, wait for the first 1 or 2 bar pullback on something like a 12 minute, even a 6-minute chart. But you can see how topsy-turvy the 12-minute was yesterday, all over the place. So basically what I'm saying is wait for a break below this range, get a 12-minute close below this range, get in, have a really tight stop, and then hold on for the next level. And the next level is pretty much going to be this low here, which lines up with the 200 moving average on the 12. Okay, so that's kind of the view that I've got at the moment. The other way to, and by the way, don't take the trade here, even on the break. Just it'll break, let it come back and retest. If a retest is successful and doesn't pop back into the range, then take the trade. Or alternatively, if we do rally a bit, take it off the top of the range. Top of the range will be up here, and then you have a pretty close short. The reason why I say don't take it on the first break below here, because the Aussie is famous for that. It'll pop below, and then immediately the buyers will step in, and they'll keep stepping in and drive it all the way back up to the top before they take their shorts and move down, and that's just going to stress you out. Okay, so rather wait for a bit of a pullback and then get in. So that's kind of my view on this at the moment. I think we're still going to get more downside today. Probably not going to be huge, but 250 odd points, which is big enough. But you've got this big gap to the downside as well, which is a massive magnet, and you've got this level here. So those would be the two targets. And it all depends what happens with non-farm payrolls. If the US markets start falling rapidly, then you could have this gap closed today as well, which would give us a decent 600-point trade. Okay, so that's kind of my view at the moment. Looking at the 30 minutes, so we do have a crossover of the alligator, but it could also just be going to sleep. In other words, we just range here for most of the day, and that's also a possibility. So that's why I'm saying just, even if you do get a break here, wait for the retest before you get in. And the retest may not come all the way back up. It'll drop and then rally a bit and then start dropping, and then you get in. Okay, so that's kind of my view at the moment. There could also be a flat top triangle brewing. Okay, but this could also end up in a channel or a wedge. Just some consolidation before another move up. Okay, so long-term trend is up. I'm looking for a bit of a pullback, and then I'm looking for a long entry. Okay, so whatever short you do take, the stop needs to be really close, and what you're actually looking for is a long entry. And this area right here, or the gap, one of these two, for me, is a great entry for a long. And the gap would be ideal because you've got this previous swing as well. Okay. I don't think there's anything much to the left. So those are the two options that we've got. Anyway, guys, that's it for me today. If I do trade today, won't be trading this afternoon. I'm traveling, but trading this morning, more than likely short scalp and tight stop loss, and pretty much just looking for the range height, I think. So the 250 points. Oh, there's nothing to stop it. So I think 270 points is what I'll be looking for. Looking to take profit on the 12-minute 200 EMA or just above it. Okay. Anyway, guys, that's my view for today. Hope it helps, and I will catch you later. Cheers for now.